First of all, I'd like to express my gratitude to all of you who expressed your condolences and your kind words uh, on the passing of my younger brother. It's changed my outlook on life. As you may know, I lost my daughter, I lost my mother, all to cancer, and now my younger brother. So it's changed how I'm going to approach this channel. I'm going to focus more on just making money rather than getting views. I've been working for the last 6 months on what I call my Bus 13 portfolio. And as the thumbnail discloses, I'm up 79.4% year to date on that portfolio. It started with 13 stocks. It got up to 15. I've taken 2 out. It's now at 14, and as I said, those 14 stocks have had a gain of 79.4% year to date. What I want to do in this video is share with you how I've identified those 14 stocks and how I'm looking at about 4 more right now and why I'm choosing to put my money into them. This will account for about 69% of my portfolio when it's all over. So I want to get into that. I want to, again, thank you. And I want to just say this is not financial advice. This is going to be sharing what I'm going to be doing from this point on. A lot of this, I'm not going to be making a video every day. I'm going to be making some videos on a private basis for those who get on the bus, those who become a part of our Patreon. Let's get the disclosure out of the way, and then I'll take you to my computer and show you exactly how I'm evaluating these stocks such that I've achieved a 79.4% year-to-date return.
Best of Us Investors presents Kerry Griegmeyer.
The first thing I decided was if I'm going to invest in these companies, and I'm going to invest in them based on their potential for taking advantage of artificial intelligence as it's coming, they had to have a large TAM, that is, a total addressable market. I wanted them to be, though, also a historical company that had positive revenues, and it was growing its revenues on an annual and a quarterly basis. It had a market cap of over $1 billion, had historical growth in revenues, and it had historical growth in income. In other words, I wanted a company that has displayed past growth potential and future growth potential. Whether you're buying into a restaurant in your neighborhood or you're buying into a big tech company, you want to make sure that they're making money. So let me take you into my computer and show you exactly what I decided I needed to make a good decision in my Bus 13 portfolio. Okay, this is the portfolio or the analysis that I use. And I'm using as an example one of the stocks that I hold currently and have held for quite some time, and that's Broadcom. I see Broadcom as a major player in the AI revolution, so that's why I wanted to own it. So what I did then was analyze this first line is their income going between 2013 and 2023. The second line is the growth rate of their income. As you can see, in 2014, they actually had a decrease of 52% growth. And then in 2015, they had an increase of 418%. That's because their revenues grew by 59% from roughly 4.2 billion to 6.8. I take that back. That's probably millions. And you can see each year I'm tracking the growth of their revenues and then seeing how it is transferring into growth in income. You can grow revenues. That means your TAM is growing, your total addressable market. But if you're not making money it means it's costing you too much to get your customers. So where I really wanted to start looking as we moved into 21, 22, and 23. And as you can see, they're both the revenues and the income are growing. Now, this number down here is their growth of their stock price. So you can see in their income grew by 70% in 2022, off of a growth of revenues of 20%, and their stock price went up 65%. Year to date, their income has grown year over year by 19%. Their revenues have grown by 5%, and their stock price is up 54%. So that's the analogy or the process that I use to make a decision. Now, this is another these two, Axelis Technology, is currently in my portfolio. And as you can see, they've achieved some outstanding numbers. They've come from some times, as you can see, where they're up and down as far as in growth of income and up and down as in growth of revenue. Right now, year to date, and again, I think this is directly in conjunction with the market has recognized that ACLS is going to be a major player in artificial intelligence. So last year, their return or their growth in stock price went up 233%. Year to date, it's up 131%. Similar with SMCI, Super Micro Computers, a very up and down. You can see sometimes their income has shown a 22% loss, a 7% loss, a 30% loss, and then they started coming into their own. And you can see their income started to grow and has grown substantially, 283% last year, and year to date up 586%. And thus you're seeing a growth in revenues and a growth in their stock price. Over the last year, their stock price is up 404. Year to date, it's up 204. Now, these then, Rambus and AEHR Test Systems, are two companies that are on my watch list, and you can see why. Their prices have grown. They have gone from a income of a negative number to a very positive number in a matter of 2 years, and that is because their revenues have grown. They dropped here about 6 million, a 25% decrease, but then from 16.6 to 50.8, and then the year to date 63, and that's why you're seeing their stock price up last year for 1 year 465%, and year to date 133%. Rambus is something similar. Rambus, though, I need to dig deeper. I need to learn more about them before I put them in my BUS 13 portfolio. And what does that mean? I need to go and do some research on insider buying and selling. I need to put that metric into this analysis. I need to put into this metric also the growth of their operating margins, the growth of their free cash flow. I need to learn more about their management. I need to sit and make sure that their earnings are growing faster than that of the S&P 500. I need to monitor their earnings calls, and I need to read their annual report. Because what I look at Rambus as an example. Why are they so sporadic? Why did they get up to where they had income of 211 million, what dropped to 6.8, then dropped to a minus 22.9, then a minus 158, got a little better and only lost 86 million, and then came back. Why? What is the reason for that erratic behavior? And before I will put it in, or just no longer consider it for my Bus 13 portfolio. So that's how I'm going to spend my time. I'm not going to be doing a video every day like I have in the past. Some of my staff, Trent and Drew and Mark, may fill in some of those mornings that I choose not to put a video up. And when I do make a video, I'm going to make it for the people who want to be a part of this whole movement, who are willing to pay $20 a month to see what I'm doing. I'm not giving it away anymore. There's too much work in it. If I'm going to read every one of these annual reports and you're not, well, then you're going to pay me to read it and then share with you what I found, and you make a decision based on that. Now, a lot of this I'm going to share, as I say, in private videos. I'm going to have it on the Discord, but by July, we're going to have our website up, and it will be shared on the website as well. So that's how I'm going to go about with the rest of my life. As I said, I got punched in the face this last week, and I've come back and told Nita I'm going to continue to do my work, but I'm not going to be obligated to put out a video every day like I have in the past. But I am going to share my means of achieving the kind of returns that I've achieved this past year or year to date in this Bus 13 portfolio. So if you want to be a part of it, get on the bus. Your seat's going to cost you $20 a month. If that's not worth a 79% return year to date, I don't know what would be. You make that decision. I'll see you the next time I see you.